friends, welcome to Scientific Investing. And today's video is a bit different and special. Different because usually when we do investing, we always hear about the brands which are either domestic or brands which have come from foreign countries and then they're trying to make a mark in India. Like if we are analyzing, let's say, Jubilant Foodwork, it's all about Domino's Pizza, and Domino's is a US brand. Or if we analyze a lot of FMCG companies like, the HULs of the world, there are a lot of companies, which are foreign brands and which are present in India. But rarely we come to know about an Indian company which is trying to establish itself as an, international brand. And today's company is one of those. And this company is none other than Eicher Motors. So few disclaimers, the valuations may not be cheap, but many times what happens if companies, they keep on executing, they keep on delivering, the valuation may always look costly, but it may remain costly, but the company keeps on delivering and price keeps on moving.
Little bit about Eicher. So the last few years of performance has not been great. And even though the revenue has increased from 7 to 9, I think the price made a top because of too much of overvaluation. And then, the growth faltered. And the revenue growth still it's showing, but I will show you the numbers of the revenue is still showing, but I'll show you the volume numbers. But you can see the net profit fell 50%, almost 30-40%. Company got impacted. Last 3 years, nothing, but the price is shooting up. So why it is happening? If you look at history, financial economics, first thing, last 3 to 5 years, they have not done really well. But see, they have added assets at 25% CAGR, but the cash flow has grown at 3% CAGR. So is it a bad investment or something good will happen? So always take numbers as a starting point. Nothing looks great, but the price is rising. And right now they're doing well. So is it just the start or is it just a small phenomenon? When they have invested heavily in asset and still didn't do cash flow, will it maintain the financial economics? Is it the right capital allocation? We need to find. The gross margins are still intact, and despite of COVID, they have maintained the gross margin, average EBITDA. So how much of operating leverage possibility is there? We are talking about, operating leverage. Financial economics, average has been very good, 15% ROA, 24% ROE, ROCE. The current numbers, not good. And why now you can connect? Because it's not because of margins. It's because of the asset turns, might be possible. Because see, they have done a 8 asset turn and right now it is at 4. Their assets have grown at 25%, but not meaningful cash flow growth rate. And they have a very good free cash flow conversion. And that is why the cash has kept on increasing, because some cash profit has been, done well. So it gives you a lot of understanding of quality, hai ya nahi hai, kitna hai, growth, and where we have to look at where they need to improve, why that improvement has not happened, and can it improve where they've invested. So if you see the Eicher Motor, they are present in two-wheeler and commercial. So two-wheeler, is the bigger business. This is basically a JV, and in that JV, they get almost 7,000 crore share, but the margin of commercial vehicle is much, much lesser. So in terms of profitability, 80-90% of the valuation is tagged to two-wheeler. That is how you should read. So don't get very excited if they're really doing in commercial vehicle, because that doesn't move your valuation. Now in two-wheeler, earlier 4 years back, it used to be a domestic company, but not now. It's an international company, and international business is now 16% of the overall business. So 8.6 crore through domestic, 1.7 crore through international. But I will talk about more detailings. In domestic now, they are not only in motorcycle, services is a significant business. And almost 13-14% of revenue comes from services like accessories and all of that. And motorcycle is 7 crore. So this is the basic revenue distribution. If we see in terms of motorcycles,
so this is, we are studying only about Eicher Motor, but we did a full-blown session, super session on automotive and electric vehicle industry, which was spread across 2 sessions, almost 7 to 8 hours of session, where we covered everything about the industry along with 20 plus companies. So in case you are interested to go through, the link is present in the description box. You can go and visit.
Last year, they have sold 6 lakhs. This number was 8 lakhs plus 4-5 years back, which means in terms of volume, they are not doing well. So we need to understand what is happening. In terms of 250cc, 90% market share, and you will always hear a lot of noise about this company entering, that company entering, but still they have been able to preserve the market share. Commercial vehicle, they have sold 57,000. Some basic numbers to give business understanding. And this year they have done well, from 1,800 crore EBITDA to 2,200 crore, and profit has jumped from 1,400 crore to 1,650 crore. Question is it sustainable? And they have been launching products, like in last 6-7 years, so many products they have launched, unlike Bajaj, which has relied only on Pulsar. So they didn't rely only on Bullet 350. This tells a lot about the innovation, the product development, the company culture, and the mindset. See the volume, as I said, it peaked for two-wheeler, it peaked at 8.23 lakh, and then it has come down to 5.95 lakh. But the profit is not that much impacted. What has happened? So let's try to understand. And because they're generating profit, growth decreased, but the net cash has kept on increasing. So these are market share number, and you can see how the solution business has held. So even though the volume has decreased, the solution business from 370 crore, it's 1587 crore, which is basically the accessories. And now from 7%, it is 15%. The international business from 3%, it is 17%. From 147 crore, it is 1732. What is important is, see, there is 100% jump in the international business, and lot of investments have gone over last 4-5 years. So that asset growth, which you saw, a lot of investments have happened here. And maybe this is the inflection point, we don't know, but that is why the momentum is. And the question is the financial economics of domestic versus international. So let's look further. CV, again, as I said, it's a JV. And in that JV, they have the profitability. If you look, just 111 crore of, profit coming from, this particular business. So CV, that is why I said it's not significant, but they're doing well in CV. If you see the kind of growth they've had in last 10 years in terms of market share gain and all, they are doing well, but company valuation perspective, it's not very significant. Again, Siddharth Lal, what is interesting is, he's the person who goes on bike on Himalayan drive. So the person, his whole brand image has been built around this two-wheeler, and many people wrote him off when the price fell from 35,000 to 13,000 for obvious reasons, because you can saw the volume numbers down from 9 lakhs to 6 lakhs. But see what he has done in international, and in many countries now, Eicher is the third player. This is only the third, fourth year. So I believe there could be a lot which can happen in the international market, and didn't happen out of air. See the kind of team they hired. So this chief of design, I think Ducati or he was the head of design in Ducati or some big premium two-wheeler company. So they have built a strong team. A lot of investment has gone into this. See how much they give importance to the brand and all. So, this tells about the team, but this slide is very, very important.
So now the most important piece of this whole exercise, the unit economics and how things are changing between domestic business to international business, and where are the points of operating leverage.
So you saw there is a big volume fall, but still the company has been able to do it. So first, I have tried to break the business in terms of revenue, total motorcycle, domestic, accessories, international, commercial, EBITDA, unit sold. So this is the domestic unit sold, which peaked at 8,20,000, and now they're selling 5,20,000. Degrowth of -13%. International motorcycle has grown at 52%, and current year growth rate is 100%, with big jump happening. And commercial vehicle also, even though last 1 year has been good for CV, you can see they are still, touching their FY17 number, and 3 years still it has degrown. Now, if you look up unit economics per unit, how much they sell. So in FY17, their mean price of domestic bike was 95,000, which is 1.34 lakhs. So basically, even though the volume fell, because of the brand power or whatever, they have been able to charge 8.7% higher price. Accessories, if you see, the accessories is growing. And why it is growing? Because every year you add new vehicles. So because new vehicles get added, your mean price on accessories, you are able to, increase, you are able to sell more accessories because you are adding additional volume. And the international bikes, you can see from 1.82 lakhs, now they are selling at 2.33 lakhs. So one bike sold internationally is as good as, 1.8 bikes sold domestic. And still they don't disclose. I'm not sure if they disclose the margins, but I have the subsidiary level information. I think both the businesses are currently working on the same margins, but this scale is much more lower. This is just 74,000. This is 6 lakh. If they reach to this scale, my sense is this business will have a much higher margin because of economies of scale. Because in some high contributing countries, they are already reached the same domestic margin in the business. So because of ability to grow the prices and pass the price inflation, they have been able to grow the revenue, and despite of the volume shock because of COVID, market peaking out, whatever, and then growing in the new international market, which is much bigger price point market, they have been able to do relatively well. And in terms of UV disruption also, now, they are, much more safe and secure. And if you see the peak EBITDA margin, they're still down from 30% margin to 20% margin. So the question is, can they go back to this margin with all the economies of scale? And maybe again, if this market starts growing, because there is some impact of COVID, it's not everything COVID, because their numbers started plummeting much before COVID. So it is yet to be seen how much they will grow, but international market is something which should keep a watch. And then with the new product rollouts, how they are able to increase the prices for domestic and how much they are able to grow. So this is the whole story of Eicher, where domestic volume growth declined, but pricing power held. International boosted by both volume growth and pricing power. Accessories and services have grown. EBITDA per bike, it's at peak, but still there is a scope of growing, and more the international will grow, and we will see more improvement here. So this is how we should look at it, and this is the subsidiary information. So standalone works on 21% margin. US is, I think these are the countries where, like you can see, this is the commercial vehicle. So commercial vehicle, see how very, very bad margin. So that is why I said don't give a lot of importance. Of course, there is a huge competition and the pricing power and the commodity cycle. So there could be again some impact here, but ye kitna jayega? Maybe 350 crore, 400 crore, max to max 20% contribution compared to this. But if you see the North America market at 257 crore revenue, it is hitting 19% margin, which is almost close to their domestic margin. So if you are able to grow this market, I see there's a scope of improving. And there are a lot of countries where, they are growing, but still it is in a very nascent stage, whether it's UK or it's Brazil, it's Canada, it's Thailand. These are markets where, they are growing at a very good rate, and somewhere they're in losses, the margins are lower. So all of this will lead to, improvement in margins. So first, can they do volume growth in international market? Can they grow the volume in domestic little bit, given the COVID effect? Can they grow the prices further, the value growth? Can they grow the accessories market? And of course, it will grow if they are selling more bikes. And can they keep growing in these countries? So your volume contribution, your pricing contribution, your margin improvement, operating leverage. So that is why, cyclic companies, these kind of structural companies, we should not look only at PE. I don't know which is the right valuation metric, but I am telling track and do from all these perspectives, mix a bit of technical, and then till the numbers are delivering and the valuations don't look out of roof. So we need to build our own scenarios. So if right now it is growing at 100%, it's very difficult to say whether it will grow 100% next year or 60%. But we need to have assumptions and scenarios, build those scenarios and assumptions, and see if till that growth is continuing, till the price is not showing, major resistance. That is how we need to play it. And they're doing a lot of things right. So they're becoming a premium global player with a very, very small market share right now. It's a brand-led push where they have invested in brand, in hiring, in design, lot of that. They have created global teams. They have invested in all that infra. And that is why, now they have started growing at 100%. But let's see, it's a one-year phenomenon, how much they contribute. Some markets, they have become top 3 player, like in New Zealand and in Europe. And on the CNG side also, they have been launching some products for CNG version of the truck and all. And that is why they have grown. There is a new capacity coming. And in the domestic, they are coming again with new products. So they're coming with a new Classic 350. There is a Scram, which is more around the sports version. And there is a 650 concept, which they have released. So they're doing all of this. So two-wheeler is the valuation driver. International is the key to growth and valuation. Services and accessories will keep on contributing and increasing. Pricing power is the key. And in commercial, the margin improvement is the key. So there are a lot of triggers, and we need to, keep monitoring the triggers and then, see how the company is playing out. But any time when the growth numbers, if you see the volumes are falling, the growth is faltering a lot, and the charts are showing pressure, that is the time we have to be, cautious. But it's a good international brand play with pricing power. That is how I will summarize the Eicher story, and least disrupted by the two-wheeler if we look at the OEM space.
So I hope this session was useful. Reply, what do you feel about Eicher Motors? And like, subscribe, hit the bell icon, and forward it to more of your friends, those who are interested in analyzing such companies. I'll see you with another video soon. Thank you.